All right, the retail rally is this year's greatest story never told. The S&P 500 Retail Index, or the RLX, which since July 14th has rallied 20%, more than virtually any living human being would have expected. So here to tell us if this can possibly continue and give us the early betting line on Thanksgiving, Christmas, holiday sales is the best of the best, Dana Telsey. She is CEO and Chief Research Officer for the Telsey Advisory Group. Our panel is still with us. Michael Darda verisimilitudinously waved the white flag of inflation. I want to revisit that. We got a perma bear, Dana, on this thing, and we got a bull, and we're going to have some fun. And I want to know, what do I do with this index now? It has just soared 20%. Do you stay with it, Dana?
What we've seen lately, just this past week when earnings were released for a lot of the retailers, November is starting off a bit sluggish. The best performing times for retail stocks are typically the fourth quarter and the first quarter. So as we get a little bit of choppiness here, as we go through the quarter into the month of December and also into January, hopefully it gets a little bit better.
Dana, the basic thing here is kind of a foot race between slowing housing, falling housing prices, and various deflationary concerns surrounding housing. But at the same time, jobs are rising nicely. Unemployment is low. I notice I picked off a number from Investors Business Daily. Real weekly earnings are now up over 3%. That's in real terms, adjusted for low gasoline prices and so forth. In your judgment, Dana, is there enough income and enough jobs to give us some more torque in the holiday sales?
Yes, there are. Not only is there enough juice just in the macroeconomic factors you mentioned, especially given lower energy prices also, but if you look at the retailers and how they're preparing for it, increased advertising is one of the things that almost every single retailer is doing this year compared to last year. And not only is it increased advertising, but they're also going to have more new merchandise every week to attract customers in the stores.
Now, Dana, when I look through this index, I mean, there's some big numbers here, and you got to help us. Nordstrom's up 40%, Kohl's up 30%. Amazon's up 30%, Federated 26, JCPenney 23. I mean, those are huge gains. Do you take some profits off the table?
I think we've seen retailers have their profits taken a little bit off the table this past week. We may get a little bit more over the next week or so, but overall, we think the retailers, they're fine to stick with because this is what creates the opportunity.
Doug Kass, you buying a lot of retailers right now?
Dana, I think that one of the most obvious thing that has helped the retailers in the last 3 months, of course, is the decline in oil, and the correlation between oil and retail stocks is quite direct. In fact, it has a very high R squared. But isn't this a slippery slope? If you look at October's comps, I reviewed 45 specialty retailers. 18 were better than expectations, 1 was in line, and 26 were worse than expectations, in a marked change from the improvement in the prior months.
All right, hang on. Let's ask Dana your response to Doug's challenge.
We agree with you that October was not great. We think November is a little bit sticky also. So far, the indicators from a lot of the companies that have spoken, November is not going to be such a great month. There's more hopes pinned on the month of December. But we think that with the run the retail stocks have had, yes, they're giving it back now. They're still poised to outperform in 2007, given the leaner inventory levels, given the energy prices. This could be an opportunity down the road.
Craig Columbus, what's your take on this retail sector?
You know I'm not a big fan of consumer discretionary. It's extended. I mean, this is a great story too frequently told. But I will say one thing about the U.S. consumer. I mean, if you look at the financials and non-performing assets as a total of the asset base, right? And you're below the historical norm. So when you want to make the recession case, the U.S. consumer is still hanging in there. It's just these stocks are too extended for us.
Mike Darda, what shape is the consumer in? You with Dana Telsey on this, or are you with our two stock market guys, Columbus and Kass, who both say stay away?
No, I'm with Dana, Larry. Ultimately, the source of spending is labor and employment. And unless Fed monetary policy has undermined the labor market, and I see no evidence of that in credit spreads or initial jobless claims, that's a leading indicator. I think that spending will be just fine.
Joe Lavorgna, you think consumer spending's going to hell in a handbag, don't you? Joe, yeah?
6 months.
Yeah.
And spending is slowing. I mean, the data this week were terrible. Retail sales, the nominal numbers that go into GDP were up 3% in the third quarter.
How about jobs and unemployment? Give us a real quickie, Joe.
Jobs will weaken, Larry, as demand slows. There's no production. We have housing completions which are flat year on year, basically, despite the fact that starts are up. We're going to see, being forward-looking, we're going to see these construction jobs be lost, and we're going to see claims pick up. So,
even though the household survey has been bonkers, it has been so strong.
Larry, it's all government. It's all government, Larry. Government has been what's driving the household survey up over 600,000 the last 4 months. Private wage and salary employment, Larry's going down.
I think business and professional services are going up strong. You're missing that. And by the way, you're missing all the people that make a living on eBay. Dana, Telsey, I can't get any consensus here, so I'm just going to fall back and ask you, what are you buying right now in your sector?
I think some of the interesting things for the holiday is the high end. Take a look at Coach. Also, if you look at J. Crew, more product newness, and consumer electronics, that'll be continue to be where the traffic goes.
And real fast, give me a quick line, Walmart and Target.
I think Walmart's putting their price leadership foot forward with the big price rollbacks. There's room for both of them because there's consumers out there that like the upper end Target and the more discounted Walmart.
And finally, in 12 seconds, Lowe's versus Home Depot.
Well, if you look at Lowe's numbers will be out on Monday, you have to believe that with Home Depot's weak sales, it'll be weak for Lowe's also.
All right, Dana Telsey, as always, the best of the best.
Thank you.
Joe Lavorgna, Mike Darda, Craig Columbus, and Doug Kass. I thank all of you. We had a pretty good debate here. We have a market. We got buyers and